Good morning, everyone. Welcome again to the series called the Knowledge Series. And today we have another very distinguished guest with us, Mr. Sanjay Sethi. Hello, Sanjay.
Hey, good morning to you, Deepak.
So Sanjay has been more than 30 years in the capital markets and finance. He has wide experience. He has been heading the project finance and the private sector group for IL&FS. And he was the executive director of Kotak Investment Banking, managing various projects there. And for last 6 years, he has been investing in startups and runs a consultancy firm called Nestor Capital Consultants LLP. Sanjay, I guess you know about this series, and we just try to catch up the various thought processes under this series. So just to start with
Yes,
you,
sure.
just to start with you, like in this unprecedented times, which none of us has gone through earlier. So what is your general view on this COVID?
So general view is, it's obviously something that we had neither, foreseen nor, we could understand the impact that this will have on the economy and on the social fabric, of the country and the world at large. So it's clearly tough times. Insofar as businesses are concerned, of course, there is a shutdown impact, and then there is an impact of, how consumer preferences will change, and the social distancing, etc., related changes that will be wrought on businesses as we move forward. So for some businesses, it will be, life as usual, hopefully in the next few months. For some other businesses, it may be, extremely tough to come back to business as usual conditions, because of consumer preferences, because of health issues, etc., and there may be some permanent changes in the consumer behavior. So I think that's how businesses will have to really differentiate themselves in terms of whether they can get back quickly, in time.
So Sanjay, one thing we all are agreeing that it is not an event. We have to live with this for a long time. Am I right? What I said?
Absolutely. I think it may be several months, if not years, when the impact of this really starts to kind of wear off, and we go back to life as usual.
So the life gonna change, and we all have to adopt that change, or maybe the new normals. Coming to the businesses, like as you said, that there are some businesses who will not face much of difficulties, and there will be set of businesses who will face more difficulties. Generally, for all businesses, what are the challenges? What do you think that is going to be?
I think businesses face many challenges. I think some are short-term in nature, and some are medium to long-term. I think first and foremost, the businesses must determine whether this COVID-19 is going to impact them only momentarily, for the next few months, or is it more germane to their business, and whether their business can be business as usual going forward, or will it be held at another level, which means clearly the capacity utilizations, if it's a manufacturing or consumer preferences moving away, if it is a services related business, whether some fundamentals of the business will change. So I think first and foremost, each business needs to determine that. In the short term, clearly, businesses need to manage their P&L and cash flows extremely closely. I think we are all seeing that businesses after businesses, be that MSMEs or large companies or even multinationals or global companies, all are looking at cutting down their cost, preserving cash, and essentially trying to ensure that as the economies and the businesses bounce back, they are left standing, and that their balance sheets and P&Ls are not irreparably damaged. So I think that is really what the short-term message really is to businesses. In the medium and long term, clearly, some businesses, in fact, most businesses, to the extent that they don't undergo fundamental change, because some businesses may have to shut down, some businesses may have to scale down their operations, etc. But I think in the long run, which today I could safely say maybe another couple of years onwards, most of these businesses should be able to resume business as usual conditions. Which means it is extremely important for businesses who are temporarily impacted to kind of go through this process for the next few months, survive, and then emerge on the other side of the pandemic. For the other kind of businesses, it may be a little more, tough because the survival and very reduced level of operations may have to be sustained for far longer. So I think that's where the real pain level really lies. So I think it depends on the kind of business you're running.
Sanjay, in our discussion earlier, that you said somewhere that preserve the balance sheet. Okay,
Yes.
Why don't you little more elaborate on this preservation of the balance sheet?
Sure. So I think while businesses, are really significantly focused on managing their P&L and cash flows, I think there are other parts of balance sheets which are also extremely important that the businesses should really, continue to spend time and energy on. So there are 2 or 3 thoughts that I have on this. One, of course, is that insofar as equity in businesses is concerned, especially for MSMEs, which typically have low level of capitalization, little high leverage as compared to larger businesses. So my first piece of advice really to MSMEs is that if there is any chance that you can raise some equity while one is undergoing, all this pain related to COVID, then my suggestion would be you should seriously consider additional capitalization of your businesses. Try and bring down your leverage. Obviously, the valuations may not be, what they were before the pandemic hit us. But I think businesses should seriously look at recapitalization if there is any opportunity whatsoever. I'm not suggesting that there will be many opportunities, but if businesses are lucky enough to get opportunity to additionally capitalize, they must do so. The second point really, Deepak, is that they should be looking at deleveraging and looking at the debt side of their balance sheet more closely. Government has recently announced that, especially for MSMEs, some 3 lakh crore of additional support if MSMEs wish to take further loans. And of course, this is limited to MSMEs who already have a banking relationship and who have taken loans from lenders. While it may be, it is an important lifeline for MSMEs, my advice typically would be that MSMEs should think a few times before loading their balance sheets with additional debt. Why I'm saying that is because it is important for MSMEs to also understand that it's, if the debt is available and you take it, you also should have the, medium to long-term ability to service it, which essentially means that, you should be able to draw up your business plan in such a way on reasonable assumptions that you will be able to honor that debt over the next few years, and that your business is not irreparably damaged because of COVID. That means it can bounce back. It is only a matter of time. So if these 2 conditions are met, businesses, can avail additional loan. But if there is any doubt whatsoever, my suggestion would be go easy on loading your balance sheet with more debt. So that's really point number 2. Additionally, I think for some, businesses, including MSMEs, if there is any chance that their balance sheets are strong enough, they have cash reserves, and they are looking at market opportunities to acquire more companies or businesses or teams, I would suggest that they should wait out a little longer, because the impact of COVID, on companies is only now starting to emerge. So my advice would be do not rush into any M&A opportunity at this stage. In the next few months, some of these businesses who are already undergoing pain, will obviously face, even more challenges. And some of these businesses may be available to you to acquire at more reasonable valuations than they would be even today. So my third advice really would be for businesses to wait a little longer before you look at consolidation opportunities.
So Sanjay, as you rightly said, there are 3 options, and out of these 3 options, let's first talk about the third option, M&A. So definitely we believe that not all the people will sail through, and there will be some weaker hands who will try to lose out their assets or businesses, right? So one should wait till they die, or they should come forward and try to negotiate with them and try to do some kind of M&A.
So if you are an acquirer, I think you should wait a little longer, because as I mentioned, the impact of of COVID has obviously played out significantly over the last 2 months, and a lot of businesses are significantly weakened already. But it is quite possible that some of these businesses will also undergo a bit of a fundamental change because of consumer preferences, etc. Neither you know it extremely well, nor does the seller. So it will always be useful to wait out a little more, engage in discussion certainly, but see how some of these businesses can try and at least recover a bit of ground, etc. And as time goes by, some of these businesses who are looking to sell will also get a little more desperate to sell, which means pricing of acquisitions may soften further. But if you, on the other hand, if you are a seller, then clearly the advice is in reverse, is to say that if you fundamentally believe that this is a business that you wish to get out of, after having determined that either you don't have the capital or you don't have the wherewithal of the loan funding or market fully intact because of COVID going forward, then allow some of the other players in your market who may be larger or stronger to acquire and do market consolidation. So clearly, if you're a seller, you should certainly engage in as wide a discussion as possible to see whether you can find some reasonable valuation and exit the business. So I think depending on whether you are a buyer or a seller, the strategy really changes.
Great, valuable. Sanjay, one more thing I would like to ask, since you have been investing in various startups. So what is this startup scenario will happen? Will a person like you or more people like you will look up at the new ideas, or they will try to invest in some established existing ideas?
So a lot of the retail consumer-focused businesses, which typically require a lot of touch points with the consumer, etc., may unfortunately change, fundamentally. So that is one thing which all the investors in the startup space are very alive to. More importantly, I think a lot of the businesses in the last few years got funded because there was just too much capital chasing too few goods or opportunities. So the valuations of startups, even at the mere ideation stage, have run into 10, 15, 20 crores at a pre-money value valuation levels, even before the idea has been taken into market or tested, for product market fit, etc. So clearly, a lot of money has gone into, into funding startups, and I've been amongst a lot of people who've been cautioning over the last 2 years that this market is too hot, and there should be some semblance of sanity returning to the market. And I think, we were expecting some level of sanity to arrive because we've had a 10-year global run of, markets going up and up after 2009 onwards. And it was time for markets to start correcting anyway, but nobody had obviously expected it will be because of, a pandemic like COVID. Now that COVID has happened, a lot of startups are finding it challenging to, for example, raise either fresh equity or their initial equities from, from VCs or from angel investors, etc. And people who had raised money, some time back and who need additional funding, a lot of down rounds, are on the anvil, which essentially means that if you raise money at a value pre-money or post-money valuation of, let's say, 10 crore rupees, you may be forced to step into the market and do a, down round at, let's say, 5 crore. So we see that, down rounds are going to be around the corner. In fact, as we speak, some large VCs, etc., have gone ahead with some of their commitments with perhaps a bit of muted valuations, some conversation that they've been holding for the last few months on businesses which they believe will withstand, the COVID-19. But I think generally there is a bit of a pause, which I expect to last for a while in the startup space. And investors are going to be very circumspect about, whether they would want to continue to spray money, hoping that 1 or 2 of the 20 or 30 that they fund will come through. I think clearly the time for that is past. And rather than gaining market share, people are increasingly focused on path to profitability, and how does COVID impact, the business, both on the top line and the bottom line, because costs are going to go up for almost all businesses. So it's a fairly challenging but interesting time.
Sanjay, this capital flow, as you said that, there were a lot of capital chasing two small good things, right? And
Sure.
I agree that there has been a lot of capital flow into the markets. And
Yes.
the LPs, that, even the foreign LPs were very keen to look at the markets like India. But now with this kind of a circumstances where all economies understood and realized that localization is better than globalization, right? Do you think that money will still flow into emerging markets, or there will be some pause?
So So if you're, yeah, so there are two parts to the story. One is really the startup space. The other is the wider general market. And even the general market has two facets, which is listed and unlisted space. So we can spend a minute each on each of these three categories. I think in the startup space in India, there are many angels, high net worth individuals or ultra high net worth individuals who continue to remain interested in, in funding startups. VCs in particular, a lot of VCs, global as well as Indian VCs, have been raising capital over the last few years, so they are well funded. Now, whether they will continue to fund aggressively in this market is an unknown. My sense would be that a lot of these VCs, despite having significant funds under management, will go slow and will be very picky and choosy about which businesses they invest in. I think for the existing investors with the existing investments in India, people would first want to review whether those investments remain valid, whether those businesses remain, require additional capital. So instead of funding new business opportunities or new startups, a lot of the money will actually going to support capital of the existing portfolio of investee companies that most of the investors have. So I think that is where most of the capital is likely to go in the startup space. Insofar as public markets are concerned, on the listed market space, India continues to be, fairly strong market and preferred market among emerging economies. But I think going forward, it will be hugely dependent on how the government of India comes to support businesses, which on a fiscal basis has not been, done to a large extent so far. But more importantly, how each individual business will fare with or without the government support. So I think, as a general principle in the listed space as well, if you see for the last few years, in the Nifty, not more than half a dozen names have really been, attracting most of the funds into the market. So it's not been a very general, market up move, for Nifty or even, companies below that. It has really been a handful of companies that have been getting most of the flows. So going forward, it's going to be clearly challenging. Indian, government has, unfortunately, does not have too much fiscal space to support a lot of the businesses. So they are being very circumspect. Also because of the fact that the COVID may last, quite a while. Government doesn't want to, kind of expend every bit of energy that it has in the fiscal space it has right away. They will also wait and see how things pan out before, announcing more measures. But I think it will be hugely important for investors to start focusing more and more on individual companies and how they really, additionally capitalize themselves and how they really fight this market impact of COVID. In the unlisted space, large private equity type businesses, they in any case look for controlled situations. So I think they will certainly find a lot of opportunities where promoters are willing to cede control, and get into transactions. Transactions may be few and far between, valuations may be low. But I think for private equity in general, it is, it is a good spot to be in. They will be circumspect, but there will be many opportunities.
Sanjay, in last, as you have been already having a lot of investments and you keep looking at it, and we all know this COVID circumstances are still evolving. We don't know that how business will, how long they have to carry on like this, when they will be stabilizing and whatever. So if I ask you, what are the three things as a health checkup you will be looking at the businesses?
I think first and foremost, it's a very interesting question. First and foremost, I think businesses should really spend a lot of thinking on how their businesses are going to be fundamentally impacted because of COVID. For example, right from airlines to entertainment to F&B, etc., are going to be significantly impacted. So to that extent, if you are in these businesses or in allied businesses, clearly you have to rethink about whether your business remains as valid and as valuable and has as large a market as it had earlier, on a longer ongoing basis. So I think that is first and foremost. If you determine that is the case, that it is a blip, that the entire industry and the entire country and the world is going through, and there is a finite timeline within which things can come to normal, then clearly to ensure that you are left standing once things start to normalize is more important. So both your P&L and your balance sheet management becomes extremely important. Third thing is that businesses should still try and retain key personnel, while even wide scale downsizing is happening in every business. it's very important for businesses who think they can survive this and can bounce back into the market to retain at least those key employees who will help them to bounce back and re-enter the market as things normalize. So I think these are some of the thoughts that businesses may need to keep in view.
So very candid thoughts and really pearls of wisdom. With this, I say thank you for your time, Sanjay, and I hope we will keep chatting on this issue again and again.
Thank you so much, Deepak. Pleasure to be interacting with you.
Thanks.
All the best. Bye-bye.